Bartosiak with trending stocks at Zacks.com. Now, you don't have to go to CarMax to realize that used car prices have been crashing back down to earth. Interest rates are on the rise, pitching car dealers at the other end of the spectrum as well. Seeing all the challenges to the landscape, EV manufacturer Tesla has been aggressively slashing prices on its new vehicles. The Model S and Model X now start at $90,000 and $100,000 in the U.S. The plaid versions of both cars are now $26,000 and $29,000 less than they were selling just in early January. Elon Musk claims he's reducing the prices a little bit to induce a large impact on demand. Now, Tesla has a unique advantage over traditional manufacturers when it comes to pricing. Other dealers get an MSRP from the manufacturer, which are just that, manufacturers' suggested retail prices. Then the dealer can decide that they're going to bang you up for $30K over MSRP. All of the new Teslas out there come from a factory-owned store. They don't have that problem. Why don't we take a look at Zacks.com and see which other EV manufacturers have the strongest earnings trends?
Good old Teslas. Zacks rank number 3 hold with a Zacks value style score of C, growth of A, momentum of D, helping round it out with a VGM composite score of B. Now let's take a look down here. Look at our revenue and EPS growth. Still really strong revenue growth on Tesla, right? Almost 24% for the current year, almost 21% for next year. Taking a little bit of a step back on the earnings side for the current year. Next year, that number is expected to swell by 28% to about $5. Now again, what are we talking about here? Talking about $5 on a stock that's $200, right? So talking about 40 times next year's earnings. Not the worst valuation when you consider these growth, the growth opportunity here. What's been happening recently, though, is if you look over the last 60 days, 5 analysts have cut their estimates for the current quarter, 5 for next quarter, 12 for the current year, and 7 for next year. This has pushed down our Zacks consensus estimate from 530 to 396 for the current year, 667 down to 509 for next year. So those estimates are kind of moving in the wrong direction. Okay, that's why it's a Zacks rank number 3. But check this out. We've got a couple of stocks, domestic autos, but these are all essentially EVs. So you got Nikola, not that they're biting off a Tesla or anything, but sure are, huh? Zacks rank number 2, buy, an F for value, F for growth, C for momentum, gives it a VGM composite score of, you guessed it, F. Let's look at these estimates here, a little bit higher in terms of the growth number on the revenue side. That's right, 534% revenue growth the current year. That's a big number. Also a big number next year, where they're expecting 156% revenue growth next year. EPS side, still losing money. Talking about losing $1.15 this year, losing 64 cents next year, but the estimates are moving in the right direction. Not as many, though. Here you have one analyst that has upped the ante over the course of the last 60 days for the current year. One has followed suit for next year. It's barely budged the consensus, though. 116 loss to 115 loss, 66 cents to 64 cents on the magnitude. But just something to keep in mind. There are competitors out there. There is some growth out here, but there's no money. Last one I want to look at is Bluebird. Now, some of you may have bounced around on one of these buses heading to school, although now things are getting different. They're electrified. Zacks rank number 2, buy, B for value, A for growth, D for momentum. Help it round out with a VGM composite score of B. Let's look at the growth side here. Solid, 23% revenue growth for the current year, 26% for next year. Back-to-back good numbers there. Over the EPS side, yes, they are making money. 46 cents is our Zacks consensus estimate for this year. That's up 140% from last year. Next year's supposed to get even better. 226, raising it up to $1.50. That would be pretty nice. And in terms of these estimates moving, it's not as strong of a story as you might think, though. So over the course of the last 30 days, you have an analyst coming, juicing up those numbers. We've gone from 7 cents to 13 cents for the current quarter, 21 to 28 for next quarter. Current year from 35 to 46, but let's not get too excited here, because if you look 90 days ago, we were supposed to get 75 cents for the quarter, so you got to get up to get down. In this case, we had to get down to get up. Still pretty solid when you're considering $1.50 on this stock, right? That's 21 per share. So the valuation is obviously going to come in a whole lot better. Just if you're looking at this year, it's not so good at 47 times, kind of online with that Tesla. But as you look and push it out a little bit further, looking out to next year, that number drops pretty considerably. So of the three, I think maybe you should put this one on your radar, Bluebird, ticker BLBD.
Every time you share this video, somebody gets a great deal on a new car. Subscribe to the YouTube channel, Twitter @Bartosiastics, and be sure to check out Zacks.com/promo for this week's deal on stocks under 10. I'm Dave Bartosiak with Trending Stocks, and I'll see you next time.